Welcome to Balancing the Ledger, where tech and finance intersect. I'm Jen Viechner.
And I'm Robert Hackett.
And today we're joined by Jay Biancamano, the Managing Director of Digital Assets for State Street. Thanks so much for being here, Jay.
Thank you. Pleasure to be here.
So State Street does not currently hold Bitcoin or trade Bitcoin or some of the traditional cryptocurrencies that we've heard of. Tell us what you mean by digital assets and what you're working on there.
We're not focused really on the cryptocurrencies, the Bitcoin, the Litecoins that are in vogue right now. We're really forward-facing, and we're thinking about, what does the future hold for assets as a whole. We're one of the largest global custodian banks. So we hold over 30 trillion of the world's assets, over 10% of the world's assets, and all those are in electronic or other traditional forms. We service these assets. We're able to provide services around these assets for our customers. So as digital assets start to gain a foothold in the asset management industry, we need to be prepared of what that means for State Street and how we can service those assets for our clients.
When is that going to happen?
That's a great question. So if you think about where we are right now, everybody knows about Bitcoin, right? We talk about Bitcoin and I use the B word. Really we're thinking about, what is a stock in digital form? What is a bond in digital form? And there's a lot of proof of concepts out there that are going on looking to digitize certain assets. What we're really starting to see right now is it's gaining traction in the illiquid assets, so real estate. There have been a number of digital issuances of real estate. You could talk about gold. There's a digital form of gold. People are talking about intellectual properties, paintings, other things like CryptoKitties, right? People have heard of CryptoKitties. So we're seeing assets start to become digitized, trickle, and then we believe there'll be a flood. When that happens, I would look at a historic precedent. If you think about 30 years ago when assets moved from materialization to dematerialization, where we moved from coupon clipping to stock certificates to electronification. We believe the same thing will happen with digital assets, but we think it's going to be a little bit of a slower process because back then it was less about what form it was and how you could hold things and more about, okay, we're just going to make things faster and increase scale. Here, it's a little different. Digital assets are not that easy to define, and defining custody and who holds them is a lot harder. And there's a lot of new technologies out there. So I think it would probably require us to work with third parties to figure out a way to serve as assets, just like we have sub-custodian relationships for a number of assets that we hold. We don't physically hold gold. However, we service assets for our customers that hold gold. So there's a lot we can do around that, and we're actually investigating a number of proof of concepts in that space.
If you're talking about partnering with other organizations that maybe already do cryptocurrency custody and custody of digital assets, what would State Street's role be in that situation?
Well, we'd be a service provider. So, we do, the thing I like to tell people, there's nothing really unique about custody, right? It's a vault or a drawer, but it's really what we do around that. We loan securities, loan our clients securities. We price them, we serve it, we do a number of services around them. And by regulation, they have to have a third-party custodian holding their assets, most large. So it's what we do with the assets, and we would want to continue to do that. And what we really want to do is to make sure our client's experience doesn't change, whether we're holding a digital asset, whether we're holding a traditional asset, or we're sub-custodian some material asset. To the client, the end game should remain the same. It should be seamless, it should be transparent, and they should be able to rely on us to do what we've always done.
How lucrative do you expect the custody of cryptocurrencies and digital assets to be compared to traditional assets?
Think about real estate right now. Real estate, when you buy real estate, it's very draconian. It takes days, weeks, sometimes months to settle a transaction. Being able to do that on a blockchain could take as little as 10 minutes. Right? So that democratizes it. And if you're able to price those assets, that means those assets become very liquid. So you could actually have a market for real estate that is unlike anything we've seen right now, which would replicate what we're doing in the equities markets. So I believe that will actually incent portfolio managers to start modeling these new, I wouldn't say, albeit new assets, but assets that weren't really democratized or easy to trade. So, if you look at a portfolio now, portfolios are 35% stock, 45% bond, 10% cash, maybe 5% something else. Thinking about 10 years from now, you'll have real estate in there. You might have intellectual property in there. You might have, wine or, some other asset holding that we don't know about right now. So I think assets under management will increase, and I think that's the unique opportunity for us.
Just recently, we saw a basketball player is securitizing his contract and actually selling shares in that to other people, a sort of tokenized form of equity in his contract.
That would be interesting. I believe that would be part of it as well. I mean, if you think about video games, making a unique character in a video game, that becomes valuable, and people bid up on that. So it's an exciting world. And I think the other part of that is you think about, my background was building new products around new technologies, certainly, building algorithms and dark pools back in the 90s came out of the electronification of the markets. Digitalization is also going to create, opportunities as well. I like to use the term digicaps. These unique assets are going to require new ways of looking at them. There's going to be asset intelligence built into them. So portfolio managers are going to need somebody like a State Street who has a front-to-end model with our Alpha model. We bought Charles River about a year ago, which is an order management system, to provide traders and portfolio managers with ideation, with unique data sets around these digital assets, which will be unique around these assets themselves. So that's really exciting, I think, for us.
I know State Street is big in ETFs as a firm, and a Bitcoin ETF is something that people have been wanting for a long, long time. They haven't yet gotten SEC approval. Do you think, based on the state of the technology and what you're seeing, that is something that could be feasible in the next few years?
Oh, absolutely, absolutely. Yeah, I think you have to have the same clarification, regulatory clarification, and the same risk assessment that the regulators want. I think they're kind of agnostic about what the underlying piece of that is, whether it's a Bitcoin or some other crypto asset, and they really want to ensure that custody is what they understand and the protections are there for the end user.
Do you think the regulators' concerns around the current state of custody are founded in terms of the roadblocks to actually getting something like that approved?
Are they founded? I don't think they would actually say that there's any one thing they're pointing to, but I do think there's the scrutiny of digital assets revolves around the idea of hacking and hackability. And I think people have been focused on that probably too much. And certainly in the area of digital assets, of digitalization of traditional assets, much less of a concern. But I think the regulators really want to understand, what does custody mean? Because we talked about that, because this really is something that exists unlike anything else. And therefore, how are we protecting it? What does a private key holder mean? What does a public key holder mean? Who has the private keys? What does that mean? Are you a custodian if you have a... So there's a lot of elementary questions I think still has to be clarified.
A lot of the cryptocurrency custodians out there right now, they call themselves qualified custodians, but we haven't actually heard from the SEC or other regulators as to what really constitutes a qualified custodian in this new world. And earlier this year, the SEC came out with some guidance, some preliminary guidance around being a custodian, what it means. But my read on that, they basically were just like, don't lose your customers' money, which is sort of obvious.
Yeah, customer protection. What they said was, here's the customer protection rule. You still have to abide by it. And with digital assets, it probably isn't as easy as you think. But one of the things I think they really came out of that, they did say that they are actually looking, some people had suggested that transfer agency could play a role in protecting the holders of digital assets. So for example, a transfer agency could have a traditional record and you're able to publish it on a blockchain, but that is not the actual official record. Then therefore, if somebody was to hack all your holdings of Apple, right, for example, the transfer agent would still be the oracle of the holder of those assets, and therefore they could destroy the old assets and issue new tokens.
In that case, you'd have to be able to unwind records that were, or transactions that were done on the blockchain. You'd have to have some editability to the ledger.
Correct. Yes, and that's one of the things the SEC is actually looking at closely. And there's a number of firms that are capable of doing that. So it's the technology's there to do that. Getting the regulators comfortable with how they approach that and how they do that is really where the next few months, few years is going to be focused on.
Is State Street one of those firms that has that capability?
We don't have that technology capability, but we've been talking to a number of firms that have. It's one of the, I think, very interesting pieces of technology out there, in addition to interoperability, which interoperability is allowing people who trade an Ethereum coin could trade on another Hyperledger type blockchain, and that's another piece of technology we're kind of focused on to understand how that works.
Give us your best guess for how soon State Street could be moving officially into digital assets.
I really can't, but I will say, as an industry as a whole, I think we're already moving in that direction. And what I like to tell people, if this is a baseball game, we probably haven't even started at the first inning yet. I think there's a lot that's going to happen in the next year, but like anything, it could happen very quickly.
And you're ready, even if it happens. So in a matter of months, a year or less, could be.
It could happen, a few months. You could have, a very high quality issuance that a lot of institutions are looking to invest in, and we should be prepared to move in that direction if our clients want us to custody those assets.
Great. Well, we'll be watching.
Great.
Thanks so much for being here, Jay.
Appreciate it. Thank you.
I'm Jen Viechner.
And I'm Robert Hackett. For more Balancing the Ledger, go to fortune.com.
We'll see you next time.